Good morning, good evening, good afternoon, depending on where you are in this world. This is Hedge Lee with a daily update for Ethereum. Last time we showed and left with a WXY and a flag, a bear flag. Since then, we've seen that there has been a decisive break down below the lower trend line of the bear flag. So the bear flag is complete and confirmed. The WXY was a very three-wave-ish, 1, 2, 3, 1, 2, 3, with quite a bit of overlap, 80% or more. And when it overlaps and goes sideways, even with an angle, with an upward pointing angle, which is a bear flag on a channel basis, it's very corrective. It is not an impulsive move. Thereby, the WXY represented a very clear consolidation phase. And what we're seeing right now is a decline in 5 waves. So already you see a series of small bear flags. In this case, it was a upward pointing wedge. Here was another one, a bear flag. They're all episodes of consolidation in the same direction of the primary trend. So from an impulsive perspective, I think we can start labeling the 5 waves. What I mean by that is the WXY here was so insignificant from a daily perspective. If you look at the daily trend, we know, and I've already seen the head and shoulders, the left shoulder, head, and the right shoulder, and it's going to pass this and then go into the white area of support. And we see this as an A, B, and a C. And that C wave decline needs to have 5 subwaves. And the white waves, 1, 2, 3, 4, 5, is exactly what you're seeing. So yes, it's still bearish for Ethereum. Many said they're buying. Well, interesting, because if we are on 1, 2, 3, and 4, the best time to buy is probably after 3. And what does that mean? 3 currently has a target of 52s in the $50 range. Somewhere between, let's say, 63 or 64 to 52. And that's really this top region of the white support zone. There is no real support until then. Then we'll get a bounce, wave 4 bounce, and then a decline in 5 subwaves for this white wave 5. And that white wave 5 is being projected to hit the bottom side of this white support zone. I'm using a semi-log chart, which defines the head and shoulders in a much more prominent, clear, visible way. So are we at the terminal end of this correction? I think so. Broadly speaking, yes. But if the wave 3 is going to target the top end of this, allow the 4 to happen, and then if price goes below the 3, that's where to cast a ladder for the entries. And the blue 1, 2, 3, 4, 5 we've been seeing are only the subwaves. The blue, I just corrected it, sorry. I had it in the wrong place. The blue 1, 2, 3, 4, and 5 are only the subwaves of the white 3. So this correction is still ongoing. We're going to get a sizable bounce, probably into January. Maybe this bounce will go all the way back to 130s or what have you. Maybe it'll be a double from the 3, bottom of wave 3 to 4, might be even a double, as long as it doesn't overlap with the bottom of 1. So this might go into January 21st, and there's a big hit I'm projecting. I don't want the 21st of January plus or minus 3 days, and that'll bring it down to one more new low. And this will be the despair, white towel throw in. everyone will think this is the new trend reversal, and when they start seeing a new low, they're just going to panic and panic sell. That's when you ladder in. Whether this happens in January, February, or whatever, I'm not exactly sure, but the new low should be somewhere in March, let's say. But if you are a swing trader, nice opportunity to ladder in, exit, ladder back in again. All right, I hope you found this to be helpful. Have a great day.